Right, another day, another piece of the puzzle. Um, as of this morning, anyway, we've got a pretty strong break of this trend line, and the dollar is getting pretty close to breaking below this uh, daily cycle low, this pivot right here at about 96. And as I noted, if this occurs, it's going to change the pattern from higher highs and higher lows to one of lower highs, and if we break this, it would be lower lows. And that is a pretty strong confirmation that the intermediate cycle has topped. And if that's the case, if that turns out to be what happens, then this cycle, this intermediate cycle, would have topped on week 7, and that would almost certainly be a left translated intermediate cycle, and left translated cycles usually, more often than not, will drop below the previous cycle low of a similar degree. So if this intermediate cycle has topped out on week 7 and it's starting to look that way, then we can expect that this low is going to get broken during the intermediate decline. All right, and um, if this whole cycle left translates and this intermediate cycle low gets taken out during the intermediate decline, then then that's it for the dollar. The rally out of the 3-year cycle low will have topped. If the whole entire 3-year cycle would be left translating, and I will be correct in that the dollar did start a bear market in early 2017. And now let me show you the bigger picture. All right, so looking at a multi-year chart, we've still got this megaphone topping pattern in play here. And if this um, intermediate cycle rolls over, left translates, moves below this um, intermediate cycle low here, then the next target would be a move back down to test this lower megaphone trend line. And then when this breaks, this would be the truncated rally that sets up the break of the pattern, the breakdown of the pattern. And so we're just watching very closely here. If the dollar goes below 96, then I will have been correct. This was a bull market top in the dollar. We've started a secular bear market, and this megaphone pattern is preparing to break down. This 3-year cycle advance has will have rolled over very early and left translated the cycle. And you can see right here already that we're already 2 intermediate cycles into this 3-year larger 3-year cycle, and we just aren't anywhere close to recovering this high. And we just spent a lot of time here, and we're nowhere near getting back above this high, and that's a pretty strong signal that that this bounce out of the 3-year cycle low is not going to recover this, and the dollar has started a bear market. Now we're just waiting for confirmation, and a move below 96 will confirm it. And then once this megaphone pattern breaks down, then that'll be all she wrote. Usually the decline will be very rapid after that. Okay, moving on to gold. This, of course, will have connotations for gold, I think. If the dollar breaks down here, then gold is, and it's almost done it tonight. But if gold can break above this peak, the October peak, it will right translate this entire intermediate cycle. And if that's the case, then the next move down into the next intermediate cycle low should not break below the August low. And um, that has connotations, I think, for the entire commodity complex, in that gold usually bottoms a little bit before the CRB. So um, clearly the CRB is moving down into a 3-year cycle low right now. The odds favor that we'll get a bounce and then a lower low in the spring, but that scenario will go out the window, I think, if gold can right translate this cycle, move clearly above the October high here. It would just, in my opinion, it would just be too long of a time span for gold to bottom in August and then the CRB to bottom out here in February or March. It's too big of a stretch. So if gold right translates this intermediate cycle, then I'm going to say we're probably getting our 3-year cycle low in the CRB right now. All right, moving on to the oil chart. Of course, oil is the biggest driver of the CRB. We've got we recovered the 10-day moving average yesterday. We're getting some follow through today. If the dollar is rolling over, then this is probably going to be a final low in the for oil, and this will also turn out to be the final 3-year cycle low in the CRB. So I think a lot depends on the next few days and what happens in the dollar. If we drop below 96, create that pattern of lower highs and lower lows, then I think the bottom for gold came in August. I think the bottom for oil and the rest of the CRB has probably occurred a couple days ago. And the next confirmation will be to break this cycle down trend line, and oil should do that even if we do have another leg down in February or March. Oil should still break this cycle trend line before dropping down into the February low. But if the dollar breaks 96, then I think we can throw that scenario probably out the window. There probably won't be a decline in a lower low in February or March. And if the dollar is entering a secular bear market, then this is just another piece of the puzzle to drive, another leg up in the stock market. The Fed has already signaled that it's willing to at least slow down, if not stop, the rate hiking cycle. We're making progress on the trade wars, so the pieces are starting to come together. And if we insert another piece of the puzzle in that the dollar has started a secular bear market, then you've got all the drivers in place for another leg up in the stock market before we move down into that next 4-year cycle low in 2020.